You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan. I want to talk about earnings today. This is going to be an important topic. So earnings comes around 4 times per year. It's like clockwork. It's the same exact trade every single time earnings season comes along. So what we do during earnings season, guys, my name is Jonathan Rose. I've been trading since 1997. I spent a ton of years on the floor of the Chicago Mercantile Exchange, traded on the floor of the Chicago Board Options Exchange. I've done nothing but trade my entire career. Earnings season is a different beast than any other trade. When it comes to earnings season, what we do is we have like a rinse and repeat strategy. The feedback that I get when I teach people how we trade earnings is they say, Jonathan, why doesn't everybody do this? And my answer every time is because they haven't learned. Trading is not brain surgery, but it is learning what works. Just like your profession. Nobody's going to figure out your profession in 6 months. They need to learn from somebody who's been there and done that, and then their learning curve can be shortened quite a bit. Well, it's the same thing in trading. So today, I'm going to walk you through the most sensible way to trade earnings. I learned this in 2011 on the floor of the Chicago Board Options Exchange. Before I learned this strategy, I would trade earnings and try to go for big winners because everything moves, but I would get my butt whooped. I didn't have any confidence. I was so frustrated until I learned how to value names going into earnings, and that's exactly what I'm going to share with you guys today. So here we go, guys. This is an important Masters in Trading Live. Okay, I got the chat open, guys. How's everybody doing? Thank you, guys. Whenever we get 150 likes, we're always going to share a free trade. We got 160 likes yesterday, so I have an earnings trade for you. At the end of this presentation, I have a really cool earnings trade for you that I want you to check out. So here we go. Oh, I thought I lost my pen already. I got to lose my pen. I just started. Okay, earnings season. Before I started, John shared this in our Discord this morning. John, this is awesome. Thank you. MIT brings a very positive vibe. There is so much negativity out there, and negativity is not allowed in our Discord room. Because of JR and his methods, I trade with new confidence, and that has bled over into other parts of my life, which is awesome. John, thank you for sharing. I'm also financially much further ahead. In July, when I did the challenge for the second time, I've been in the market for 25 years plus, and there's nothing out there like this. John, I really appreciate you sharing this. This is the exact vibe that we try to have in our Discord. We are looking for long-term relationships with those who learn how to trade our approach. So let me tell you the concept. Earnings season equals opportunity, okay? Earnings season is opportunity. That's when we get excited. It's the same trade, rinse and repeat. Options misprice the real move a stock makes on earnings. This is exactly what I learned on the CBOE, and it's not about guessing direction. It's about guessing movement. We want volatility bets. We don't want to just bet on direction. So how do we do it? We identify stocks where the expected move is underpriced. Said in layman's terms, we look at the options, we see how the options are priced, we know how much a stock moves post earnings because they release earnings every single quarter. So Apple has released earnings every single quarter since the early 80s or late 70s. We have an idea of how much Apple moves after earnings. Now, we don't know if it's going to go higher or lower, but we have a pretty good idea of what range to expect when we're trading Apple, okay? But there's so many other stocks that are just valued incorrectly. So we want to look for trades week before earnings. We want to capture that volatility buildup going into earnings. It's also, like all of our trades, guys, no surprises. When you get in, it's defined risk. You make the decision of how much you're comfortable risking before you get into the trade. You don't get into the trade and then say, whoa, I don't want to risk all that money. I'm going to stop myself out. No, that's a weak hand. You make the decision what you're comfortable risking on that play before you get into the trade. That way you have confidence if it goes against you because you've already decided what you're comfortable risking. We're going to go through an example, and this is the audience participation part of our program. So I'd really like some audience participation. Mispriced volatility. I'm going to go through an example. And this example is going to be in a phony baloney ticker, XYZ. XYZ released earnings, 5 earnings ago, and it moved 15%. Then it released earnings again, and it moved 15%. Again, it released earnings and moved 15%, 15%, 15%. How much do we think it's going to move for the next earnings? The last 5 times it's moved 15%, up 15%, down 15%. It didn't move any more than that. Is it fair that we can probably assume, if I was going to say the over-under on movement is probably 15%, right? Just for that one day. Yeah, it's just, I don't know. It moves 15% every time. JR, what do you think it's going to move? I don't know, 15%. Fine. Okay. Let's value earnings, right? 15%. Now we're all doing it. Great. Okay. What if I add this? Now, earnings, XYZ, it moved 15% after its earnings. We know it moves 15% after its earnings, right? But now, how much should this be valued at? 15% for earnings. Now, what about the other 19 days? Because it's expiring in 20 days. So how much volatility should we price for these 19 days? Audience participation part of our program. It's not 15% anymore. These 19 days need to have a little bit of volatility, right? Ernie, I like that. I like that, Ernie. Anybody else? Saul, I'm down with that too. What did I just do? There we go. So how about we say 15 plus 3 to 5, right? Perfect. 3 to 6. Chandra, you want to go 6? Fine. So let's say this should be 20%. I think this is a good value. 20 days. Do you guys understand what we're doing here though? If it moves 15% every single time for that one day, well, now I got 20 days. 15% is one day. And those other 19 days, we're going to say it could move 5%. We're just going to give a little respect for the market. Things can move around. Okay. This is exactly how we trade earnings. Literally rinse and repeat the same time. Now I'm going to show you a real live example. I'm going to walk you through a trade. Most important, guys, don't jump to the market. I want you to understand why we do a trade like this. I want you to see where the value is. So let's do it again. Oh, before I do that, I want to show you the results of our earnings program. So you guys just believe me that I know what I'm talking about because there is so many people out there. 68% winning percentage, 50 positions. These are all closed. These are all of our closed positions. We still have 3 or 4 open positions for this earnings. We hold them for 32 days on average, 38%. Boom, boom. Obviously, annualized gain is a sexy number, but those are our earnings. Hit that like button. Finder found. Thank you for throwing that out. Likes. So I know what I'm talking about when it comes to earnings, guys. Give me the benefit of the doubt, okay? We're going to walk you through a trade. We just took off this trade actually in Atec. That was our earnings trade. We took off this trade on Friday. That's why I'm going over these today. Everybody made money in our trade for Atec. Way to go, guys. Glockenspiel. But now let's get into a trade. Okay. Earnings Advantage program. In the program, you see how we find mispriced volatility, exact setups, rinse, and repeat. Okay, here we go. Jesus, XYZ earnings are on 11/6 according to TradingView. XYZ is just an example. It's like ABC. Cute. Okay, this is real data that I'm sharing with you. Okay, this is real. This is an example. Now, the last 4 earnings releases. This is how much this stock moved. We are still in the audience participation portion. So if it moves this much, how much do we think it's going to move this earnings? I'll be the conservative one. 20%, 22%? That's not crazy, right? 22%, 20%, 25%? Yeah. 28%, yeah. 20. I'm trying to be conservative too. Yeah, 28%. I agree. That's more of the average, guys. I'm looking just to be like 22%. If somebody said over or under, I would be like, that's a no-brainer. Over 22%, right? Cool. We all get it. I love it. We all get it. Okay, cool. So now watch. Ticker symbol BROS, BROS. The last 4 earnings released, it's moved this much. Right now, I'm going to pull up the options. It's priced at 18%. But not only that, guys, it's priced at 18%. I'm going to show it to you. There's 18 days to go until expiration. 18 days. So let's say 18 days, we gave 5%. And then the average of everybody was 25%. I think that we value this at about between 27 to 30%. The market is only pricing in 18%. It is underpriced. Extremely underpriced. Look at here. November 10. That's about 18%. Okay, it would be 11% if it was 20. And so what can we do? Stock's at 56, right? Stock's at 56. Now, if I shared a straddle, it would be expensive. A straddle is buying the 56 calls and buying the 56 puts. Those aren't really a trade that I'm going to share in my community. Why? Because it's too expensive. I don't want you putting out so much money to make a trade. It's $10 to get in that straddle. No thanks. Not really looking to do that. I think we can do something better. And rather than that, I'm going to move this off screen because I want you to understand the trade. Bros is at 56. 60 calls and say the 52 puts. If we do this, it's a strangle. If we buy the 60 calls and buy the 52 puts, we want it to go above 60 or below 52. And that is a great way to get the cost basis down on a trade. And so if I pull up Bros here, 56.66, in order to get the cost down, maybe you consider buying these 60s and buying these 53s or 54s. If you can do those for $3.50, do that whole thing for $7, it gets the cost down from the straddle. But again, the reason why you want to do the trade is because of this example that I walked you guys through. Because we together collectively valued the options in Bros, and collectively we valued those options at about 18%. The market's pricing in about 28%. So that sounds like we got 10 points of edge in that trade. That's a lot of edge, guys. That's a lot of edge. So right now, Bros is very, very inexpensive relative to how it historically trades. Okay? There's a learning curve in learning this, but learning anything worth learning, there is a learning curve. If anybody wants to try our earnings program, guys, investorplace.com/earnings 2025. And I got to tell you, it is by far the most consistent way that I've ever learned how to trade earnings. Again, we trade with a 68% winning percentage, with our average gain on position is 38%. Mohammed, what if you want simple option? This trade is not for you, my friend. So every single day I'm sharing a trade on here as long as we get over 150 likes. Most of the days we're doing simple calls, simple puts. But when we trade earnings, sadly, the option of the simple trade is not what performs best for us. So we just go where the math is. We have 68% success rate on earnings trades like this. Okay? Investorplace.com/earnings 2025. What we always do, Rocket Man, what's up, Nate, is hop off for our all access. For everybody else, thanks for watching. Give a thumbs up. And again, we get over 150 likes, we'll always get a free trade. And tomorrow we'll do something a little bit more straightforward. We won't do a straddle or a strangle. Mohammed will do some basic calls or basic puts. All right, guys. Thanks so much for watching. Hopefully you enjoyed this. Hey guys, hopping back on for all access. How you guys doing?